Good afternoon, good morning, everybody.
I think we could start. Anyway, this is a warm welcome from a cold, snowy, unfortunately, Austria. I hope that things in Brazil are a little warmer. On today's webinar, we have Paul Resch, who is the co-founder and CEO of Valutico, and we have Leonardo Grisotto, who is the co-founder of Zaxo. During the course of the webinar, you will have a chance to obviously ask your questions, but I do advise that you use the Q&A tool and also the chat as well, just for when you have any thoughts during the course of this webinar. Anyway, I will leave it to you, gentlemen. Best of luck, and yeah, I hope everyone enjoys it. Thank you very much.
Thank you very much, Alexander, for the introduction. Leonardo, good afternoon or good morning, I guess. How are you?
We are in the middle, coming from morning going to afternoon.
we cover the whole planet.
It's okay. Good morning, everyone. Thanks to you.
Good morning also, yeah, and good afternoon to the audience. Thank you for joining us today. We have a very interesting presentation and a little discussion prepared to you. We'll also give you a little demo of Valutico itself. And throughout the presentation, we have a few polls that should make the whole thing a bit more interactive. Let's give this a try immediately now and start with a poll. Where is everyone based? It's always interesting to hear that. North America, Europe, South America now catching up. I guess I'm the only one who sees the live votes coming in here. 50% South America now, so Leonardo, it's your corner of the world, I guess.
That will be only me. I'm in doubt.
No. We have quite a few participants today.
Oh, good.
Great. Good. Shall we start? Well, maybe a little overview of what we have planned for you today. In the meantime, I will end this poll here. We've already had a little introduction. Maybe I'll go ahead and introduce myself, Paul Resch, one of the founders of Valutico, previously in mergers and acquisitions myself, like you, Leonardo. So I worked at Deutsche Bank, built some of the models there that became standard. Then finally decided to venture out and do my own thing. When we started Valutico about 6 years ago, we built it over a circa 3-year period and then launched another 3 years ago. I think we actually have a slide for that. Let me jump ahead. Yes, here we go. Well, what is Valutico? It's obviously a valuation platform, right? You all know the status quo. You work in spreadsheets, you work with databases, you have to collect data from the various different sources. You do your analysis, and then you have to get your results to slides or some other presentable format. And this is where Valutico comes in. With Valutico, all of that happens in one integrated and cloud-based solution. So that means we typically save our clients between 30 and 50% of the time on any given valuation. What does it mean? Well, we connect also with a lot of databases, Capital IQ and a number of other world-leading databases where we get our data from. Actually, some of the statistics here are quite outdated. We're in over 40 countries by now. You see how fast we're growing, and this presentation is only a few weeks old. And rapidly growing number of databases and connections in Valutico. Leonardo, but we'd like to hear a bit more from you. No, right? We have another slide. Apologies. Just a few examples. No, I think we can skip this one. Let's jump straight to your slides because we'd like to learn how you're using Valutico.
Okay. Well, I'm not from the investment banking industry. My whole life I worked with financial consulting, more focused on investments or cash flow analysis and more management stuff and this kind of work. So from throughout the years, we've been required to process valuations and to deal with complex situations when it comes to M&A. So I decided to work only with M&A for since 2013, I think. And since from there, I developed my practice. And last year, we merged 3 consulting firms here in Brazil, specifically here in the South. We are located in Curitiba, Paraná State. Zaxo itself, Enterprise First, and Leon Bravo, which was my previous firm. So we put together 20 years of experience in leading deals with national or international investors. So today we are in 7 partners. We have more than 7 staff helping us to deploy not only valuations, but the whole process of mergers and acquisitions. So I'm glad to be here to talk with you a little bit.
A very impressive growth story, and I can proudly say we've been part of some of the story recently, not the whole story yet, but we're looking forward to accompanying you on the further growth path, right?
Good.
And how many valuations do you guys do every year, roughly?
Well, roughly, I used to do from 12 to 20 valuations a year. We are focused on middle market, so only private mandate exclusively mandates. So sometimes when we offer buy-side services, we have one client, but we need to process more than one valuation per client. We need to screen the market and then value those targets to our client. So one mandate, various valuations. So we process on average 20, 25 valuations a year.
Okay.
Easily.
Well, I'm just doing the math in my head and think about how much time we saved you guys, or how many more valuations you can do now, right? If you only need half the time for it.
Yeah, the time frame is incomparable, because when we used to do that using only spreadsheets, that will take. We're gonna discuss this some points further, but to advance some things here, we used to take a lot of time thinking about all the rows in a spreadsheet, all the rows. Now we have Valutico helping us to speed it up, so to gather world-class databases, bring it to the table, and then we have not only quality of data, of databases, of inputs to serve our valuations, but a wide range of peers and transactions that we can compare and enrich our reports to our clients.
Okay. Well, can you describe the process before you had Valutico? What was it like then?
Well, the process will be, if I can put some things similar, it would be like a mining company. We had to mine, to run through the market, mining data from public databases or for specific deals or specific segments. So it's not easy to gather all this information when it comes, for example, transactions. We deal most part of our time with privately held companies, which doesn't have public data available. So it's quite difficult to retrieve those data. So in order to do that, we took weeks to establish or to build only a simple table, a simple spreadsheet comparing the company against its peers or against the transactions that had been made in the past. So it took on average 2, 3, even 1 month of work to pull all these things together.
1 month of work. Well, I think I started another poll in the meantime to our audience here, and I think we even have one question that relates to or that asks people how long it typically takes them to do evaluation. So let's see what our audience has to say. This will be interesting. Okay, but I mean, if it used to take you a month, I guess Valutico paid off relatively quickly, if I may say so.
Sure, if we sum up all the salaries and the work rates, so it will pay itself in just a few days, I think.
Got it. Very good. I think we need to rethink pricing, Leonardo. Just kidding.
Not for me. please.
Okay, good. Very good. Thank you for that. Okay. Well, thank you for the introduction to Zaxo. I think with that, we'll have a little demonstration of the platform, right? And we'll continue our dialogue while we run the audience through the presentation.
All right.
Cool. In the meantime, the results of the second poll. I see it's 50-50 split. Some do less than 10 valuations a year. Some do 11 to 30 valuations a year. Oh, sorry, you can't see that actually. Now you should be able to see that.
Yeah.
Good. Let me switch over. And I'd like to remind the audience, if you have any questions, please just ask them on the Q&A tool here. That's the best way to ask, or do it on the chat, please. Perfect. That.
Can I ask you something before you start the demonstration, Paul?
Of course, please.
How did you come with the idea of Valutico?
Yeah, you know, I worked as an analyst in investment banking, and it's, you know, some parts of my work I really liked, some parts I really didn't like, and we tried to automate the parts that I didn't like, right? That was really the idea, you know, a tool by, you know, M&A professionals, investment professionals for professionals, right? Something to make the life easier. And that was really the basis for what became Valutico. We built the first prototype, and after that, we simply listened to what the clients wanted, and we still do that, right? So we develop very interactively or very, you know, collaboratively with our clients. Yeah. Good. In the meantime, you should see the dashboard, and I think for today's demonstration, we could do a private market valuation. That's probably the easiest. By the way, Valutico also has features or modules where you can value a listed company. That's capital markets. Maybe I'll start with a very quick intro also to the resources module that gives you valuation parameters across the world. So let's say today we're doing evaluation in Brazil, and it would propose risk-free rates, corporate tax rate, market risk premium, and so on. And you can choose any other country in the world should you happen to do, you know, cross-border work, right? Very, very quick way to get this kind of data. So you don't need to look for it in various different databases anymore, but you get it all from Valutico. So this is country-specific data. Then we also give you multiples and beta factors here for various different industries. And you can even filter by country. And then we do the same thing here also for transactions. So same industry classifications here. And then again, the different multiples in each sector, in each industry. So if you need something quickly, or if you need Valutico just to fill your own models, you can use this. But what normally people would do is they would do a private company valuation, and I'll just call this a test company. Shall we do a Brazilian one, or European one? Let's do an Austrian one. We've never done an Austrian one, or maybe Germany. Austria is too small. Nobody knows Austria. Yeah, what we could now do is we could select an industry, or we could browse industries. So give you different, you know, industry classifications. Let's find something very German, maybe a construction or a machinery company. There we go, machinery. And then we provide a revenue number. Let's say this company has 1 million in revenues. And now you see there's also an optional input here, a similar public company. The question is, do we already know one company out of the peer group? If not, we can just leave this empty and the system will just guess the right peer group. And we could also provide a valuation date. Yes, please, Leonardo.
I may suggest something. This particular field here is very important because it helps Valutico to retrieve a more qualified information and retrieve more qualified peers. Every time we spend a little bit more time searching a peer company to put right in here, Valutico brings us a much more qualitative set of peers and transactions. So it's very important you qualify that before.
Yeah, I think you're spot on there, right? Because if we already know one company from the peer group, right, it's very easy for us to find. Well, it's not still technically complex, right? But we can find other companies. But if you just give us the country and the revenue and the industry, you know, these industry classifications are very crude, right? So it's harder for us to find the right peer group there.
That's right.
Yeah. No, you're absolutely right there. And it's, I would agree. It's the single best thing you can do to get a good peer group is to already know one company out of a peer group. Yeah. And I mean, people ask me for the strangest peer groups, right? And you would be surprised for which industries you can find listed peers, right? Did you know, Leonardo, there are even listed M&A advisors? I had no idea, but in Asia, that's a thing. Yeah, yeah.
Is that so?
That's a thing. Yeah. You find everything. Yeah, so next time you do evaluation for Zaxo itself, I can share a peer group with you.
I'll search for that.
Super. Good. Well, we're at step number 2 now, qualitative assessment, and you see, the different steps. We then get to the peer group, then the projections, then transactions, the valuation, and the export. Yeah, so it's always the same. These are always the same steps. So there's always obviously also less room to make errors, right? Because you have sort of training wheels on when you do evaluation, right? You can't completely destroy your valuation. With Excel spreadsheets, obviously, that's quite easy. Yeah, and so in this first step, I won't spend too much time here, but obviously what we're doing here, or not obviously, but what we're doing here is we're asking the user to provide some qualitative inputs, right? What about management quality, right? Is there, outstanding management? But, does the company rely too much on management? Does the company rely too much on individual customers, on individual distribution partners? And as you can see, if I change something here, it changes the overall average weight, right? And the risk factor. And that has an impact on our cost of equity premium. So this is what we add on top of CAPM. And it also has an impact on the discount to trading multiples that we're applying. So we're trying to capture the firm-specific risk here. Very popular module, especially with our transaction advisory clients or M&A corporate finance clients.
Yeah, especially when we are dealing with privately held companies. So we need to impact the valuation or the numbers or the peer groups with a more specific cost of equity. So we use this qualitative assessment to do that. So it's very helpful.
Have you ever tried to do it together with your clients? Have you done that?
What we do is we set up a Google form and we send to all the partners. And they respond to it individually. So we combine those answers. We set an average or a median, and then we bring that to here. So we have a overall qualitative assessment for all the company from starting from the views of all partners. So it's quite helpful.
Very clever idea. Yeah. Well, what we found out is that this is a very engaging exercise, right? Because these are, these sometimes clients struggle with the more technical aspects of valuation, right? What is beta? What is, a multiple? But these things here, they intuitively understand, right? It's competition. Yes, more competition is bad for my valuation, right? Better management quality is good for my valuation, and so on. So it's intuitively easier to understand, right? And the impacts these factors have. Also, for example, when you educate your clients about ways to increase the value of a business, right, which might also be interesting in preparing a company for an exit. Good. I think no need to spend more time here. I think the idea is clear. Let's jump to the next step, and that's the peer group. So let's see what the system proposes now for our German machinery company. Obviously, all German companies here, no surprise there, right? It would only, use some other companies, foreign companies, if there weren't enough machinery companies in Germany. But in this case, no problem. Yeah, what do we see here? Well, we see market caps, we see different multiples, forward-looking multiples, starting with a sales multiple, going to the price-earnings multiple. We calculate debt ratios and credit spreads, as well as beta factors. And then, of course, you can change your peer group. Right? So you can work on your peer group and adapt it. So we could easily add a company to our peer group here. Let me think of this one now. It's an Austrian machinery company. One click and a few seconds of waiting time, and then the system will populate the table and add the financials for this company, Andritz. There we go. Already loaded. It's really as quick as that, right? No need to go into databases, do calculations yourselves in annual reports, in quarterly reports. All of this is done automatically. My favorite feature is the benchmarking feature here, because this shows you graphically which companies are outliers. And so we see a Singular's Technologies AG here, which grows much faster, but shrank before. So it's a bit of an outlier. So I would just remove this here. And then we have one company here, Rational AG, which has a very high EBIT margin, probably also a bit too high for our peer group. So we would just remove that too. And as I said, overall, just a graphical tool to clean up your peer group, because what you typically want to have is a peer group that is very similar to the company you're valuing. Of course, you can add your own peers. I've showed you that, but you can also filter, by industry, country, and very soon also by keyword. So this is something we're very excited about, launching together with version 3 of our platform in a few weeks from now. Leonardo, have I forgotten anything here on the peer selection screen?
Well, the applied metric down the table, so you can see the usage of the discount and premium above, then minus 29%. So you have here the peer group, all the median from all the companies, the industry median, retrieving machinery industry. So you have this overall picture, and then you have the discount premium to the metric that the system is going to apply, and that you're gonna have to understand. For all those companies are bigger companies than yours, for example. For example, we have here EV sales 2021 median 0.81 times EV sales. So this is for this peer group. So most of these companies are 3 billion to 224 million. So most part of them are big companies. So if you're gonna do a valuation for a middle market company or a privately held company, a small company, you're not gonna use 0.181 times. You're gonna use 0.58 times, because this is more precise. This is behind it. It has all those risk factors that you had input in the previous step, qualitative assessment. So only to make sure.
And this is such an important point you make there, Leonardo, right? Because what we sometimes hear from mid-market advisors is, yes, listed companies are not relevant for my work, right? Yeah. I only look at transaction multiples. I mean, of course, we also provide you with transaction multiples, and we'll get there in a few minutes. But we think that every additional data point is relevant, right? And even though it's not directly comparable, the large global corporations, after you factor in a discount, a small company discount, a liquidity discount, whatever you want to call it, it just adds another data point to your analysis, right? And increases the value of your valuation, right? Yeah. Very good point. Yeah. Good. Well, and of course, in any case, you need the beta factors, right, from the large global listed companies, right? You can't calculate beta factors from small transactions. One thing to note is that these discounts that Leonardo just mentioned can also be overwritten, right? So if you have your own model for a small company discount and you want to use this, you can overwrite everything. So everything is built in a modular way, so you can change stuff. Good. Yeah, and then a few more options here. Show details, show beta calculation, just an example. I mean, obviously, we give you all the background calculations here. In this case, the beta calculation and the regression analysis and what goes into the data. So that's definitely also super relevant for you. But what I would also like to show you is this here, show more like this. If you click show more like this, it will produce a list of companies that are similar to the one you've just looked at, right? So that's very helpful, because once you have a peer group, you can then drill down further into certain directions, right? You find a company that you really like, and then you look at companies that are similar to the one you've just looked at, right? And you remove some others from your peer group, right? And so then peer group definition becomes this iterative process and very intuitive. Okay. I will jump to the next step, and that's financial projections. And I think we should speed up a little bit here. And Leonardo, you remind me if I forget something in my presentation, please.
Okay.
Okay, so financial projections, two options here. Valutico estimates is one option. If you don't have, financial forecasts, for example, right? If you are doing a valuation outside in, right? Or you're representing somebody on the buy side, and you only have a teaser with, only a handful of numbers, Valutico estimates can really help you build a good valuation, a good outside in valuation, right? Keep in mind, you can also upload a financial model, but for now, I want to show you the Valutico estimates. So what you see here is basically an overview of the most important financial metrics of a company. Sales, EBITDA, and so on here from the P&L, CapEx from the cash flow statement, and then working capital positions and others from the balance sheet. And what's interesting is that even though we only provided one number, if you remember, 1 million in revenues, that's the number you see here, the system has now pre-populated everything else. So it's assuming growth rates here. It is assuming margins and a certain margin development and everything else, right? Now, how does the system do this, right? We don't have a crystal ball. We can't look into the future. That's true. We can't look into the future for our company here. But what analysts do for the peer group is that they look into the future for the peer group, right? They build projections. And I want to quickly show you this on the benchmarking tab here. So here again, you see our peer group and you see the historic growth rates, but you also see these forecasts here. Sales, in this case, it's a sales forecast, growth numbers. And what the system does is it looks at analyst forecasts. You have these analysts sitting in banks, usually in research houses, and they build financial models for these companies, and they project the future. And what we do is basically, if we don't know it, we just take the median growth rate here, and we use this for our company, because we're basically saying, yes, these are large global companies. They're not directly comparable, but anything that influences their growth rates, their margins should also influence our company's growth rates and margins. And so with that information about sales growth rates, or for example, the EBIT margins here, we can then build this entire table. And everything that's green is a forecast based on peers, whereas everything that's black or gray is basically an extrapolation. So for example, here we're just extrapolating these sales outstanding to forecast the accounts receivable. Now, of course, you can override all of this, right? So I could just put in my own numbers, whether this is an absolute number or a relative number. You can just put everything in here and just build your own forecasts. So if you need to do something quickly, this is the way to do it. There is, of course, also the option to upload your financials. So in the vast majority of cases, you will build your own financial model, right? You need the flexibility to build your own operating model. You need the flexibility of a spreadsheet, right? And for these cases, you can open the importer and you can download a model template, work with a model template. I won't show this now, it would be a bit too much for here. And then just drag and drop it here. And we will read the data of that model into Valutico. And that doesn't just work with a model template, that even works with your very own model templates or even your client's templates. Just a few small things you need to prepare in your model, and then you can read it automatically in Valutico. Is this a feature you guys are using at Zaxo?
Yeah, we use that a lot. We have our own model, and we do the export tab to input here in the system and compare against the peers and other things.
It's a big time saver.
Yeah, that's right.
Well, you'd be surprised that so many of our clients have, they're not even using it, right? And so whenever I show this, they're always fascinated, right? Because it really does save a lot of time.
Yeah.
Good. Obviously, you can change a few things here. You can run different scenarios. In this case, we only have a peer case, but you could, create an upside case, a downside case, a management case, a buyer case, a seller case, you name it. And then some more options here. I won't go into too much detail, but we give you a few more plausibility checks for your valuation. You can make sure your forecasts are plausible. But I will now proceed to the next step, and that's transactions. So just like with the peer group, what the system does here again is it's trying to find peers, right, for the company we're valuing. And here it's now decided to do a bit of a pan-European approach in machinery. Not necessary. not necessary. I think we could probably get enough peers just by looking in Germany, or not, sorry, not peers, but comparable transactions, precedent transactions. But again, it's also making a suggestion here. You know, you always see the buyer, you see the target, you see the country and the sub-industry, the stake that was acquired and the deal value. And then we also show you the different multiples, right? And yeah, just like with the peer group at the end, we calculate the median of all the above transactions. We also show you the median here, by the way, for machinery overall. Yeah, so all companies in machinery global. So you have an additional, you know, data point to benchmark against. And of course, just like with the peer group, you can refine this this list. So here, for example, 1.6 times EBITDA, that's probably not a very good one. Normally what you would do here is you would eliminate outliers. What I really like to do is do a search here, a filter, and do a full text search, because here you can become really specific, right? I mean, of course, you can just search for machinery, but that would be easier. You can just do the industry search here, 3,600 machinery deals. Let's have a look at what Germany has to offer. 255 deals in Germany in machinery. And now we could, for example, limit this to the last 3 years, 6 transactions. And now we can, you know, just add these deals here very quickly to our list of transactions.
How many transactions can you add to this table?
It's in theory, it's unlimited. Just keep in mind when you export everything to PowerPoint, it can mess up your formatting a little bit, but it's unlimited. One thing, by the way, we are planning to do here is to have different tiers of peers, but also of transactions, right? So you have a tier 1, tier 2, tier 3, and then the idea is that you can then switch between the different tiers and see what the effect is.
Excellent. Good practice.
Yeah. Well, and just like with the peers, you could also apply a discount or a median here. We're not proposing anything because it really depends on, you know, the type of deals you have selected here above, right? If you only had 17 billion ThyssenKrupp elevator deals, you would probably want to, you know, include a discount. In this case, I've just decided to remove this outlier transaction and instead focused on these smaller deals. I mean, they're still big, right? But a bit smaller deals to arrive at our valuation multiples here for transactions. Okay, anything to add? Anything I forgot, Leonardo?
One thing is worth to mention is when you have this kind of table, transactions and peer groups easily like that, so you start putting your analyst, or if you are an analyst, you start using your time more wisely. Instead of wasting time searching the whole internet to gather all those data, which lots of times are very hard to have. So you start really analyzing the deals, analyzing the segment, understanding the drivers behind it, the drivers that move this industry. So you jump from a very operational work to a more strategic and more qualified work. So you stop wasting your time with things that does not add to your client from their point of view, and start bringing qualitative information, insights from the industry. Sometimes when we have this kind of table here, for example, transactions, privately held companies, with the multiples right over there, we show them this, oh, wow, I've never seen that before. And you're right, these companies are quite similar to mine. And so we set the expectations. For example, one client of ours were expecting 2 times sales. So we said, you were wrong. And we proved how he was wrong by showing this right table here. So the transaction, the market is not paying 2 times sales. It's paying 150, 125 times. The overall market, the funds, the investors are paying that. So you, as I said, you jump from very operational and data work to more strategic and insightful work.
Yeah. And I think ultimately the kind of work that your client likes to pay for, right? Nobody likes to pay for, cost of capital analysis for 3 days. Yeah.
Exactly.
Yeah. Yeah. In the meantime, I've done another little poll. Thank you for contributing here. Super interesting results. Leonardo, can you also see the results as a panelist?
Yeah. Yes,
okay, fantastic. So how long does a typical valuation take to complete in terms of hours? Well, it's not really hours, I guess, right? It's days here. We need to correct this. But yeah, interesting, right? So anything between 1 to 2 days to more than 7 days, right? So there is some wide variation there. I assume it's because we have some Valutico users and some non-Valutico users here in the audience. No, but it just proves that valuation work takes a long time, right? That's why it's also paid well, I guess. Good. Okay, with this, let's jump to the most exciting part, because now we go to the actual valuation. Until now, all we've done was really collect some inputs for our valuation, right? Next step is now where it all comes together. So what the system does now is it's using all these inputs. It's performing cost of capital analysis. It's running, well, as you can see here, it's almost too quick now. I have a new computer, everything is so fast, but it's then also showing all the results here in one nice overview chart. Yeah? We used to call this a football field chart. So what you see here at the top are the 4 different DCF-based methods that we have. We have 5 actually, one is hidden here. Yeah, but if I look at this, they're suggesting a valuation of, let's say, well, 8, 9, maybe 100,000, maybe 1 million, right? Further down here, we see trading comparables. And here, but by the way, I haven't even explained, right? The blue range here for the DCF-based methods is based on a sensitivity analysis, right? You already see we're changing the terminal growth rate and we're changing the WACC, right? And that's how you get these sensitivities. In the midpoint, you get the green dot. For the trading comparables, it's a bit different. Here, the blue bar, the blue range here shows a range around where the peers are trading. And if you remember, we entered a discount to where the peers are, to what the peers are, 29% discount. So that's why the green dot is to the left here of that range. And then further down, we have transaction comparables. That's typically what you see, right? Here you have control premiums. So these are typically higher than the trading comps. Some outliers here to the north, some outliers to the south. And then finally, also a leveraged buyout analysis. 22 times entry exit, probably a bit aggressive. So if I see this, I would probably override this. I see 18 times here, well, plausible, 8 times here, 11 times. Why don't we change this to maybe a 15? That's probably still good. So as you can see, I can directly make some changes here and everything will update in real time. It's also something very nice. If you want to do this kind of analysis with your client, you can immediately show them what the effects are of changes here to your parameters. Rest looks fine. The system also, by the way, proposes a range here in light blue. I think that range is probably a bit too wide, but we can narrow that down further once we've chosen the methods we want to show. Here we're bridging the gap between enterprise value and equity value. You can make adjustments to the net debt. When in the process, finally some more pension obligations are found or whatever it is, this is where you can enter the stuff and it will update the equity value. And then a very nice graphical way of showing the WACC calculation here. So in this part here, we see that the capital asset pricing model mostly, the various different adjustments we're making. So our green basically is the cost of equity part of this tree, of this branch, and then cost of debt is in dark blue here. And then everything below is really the side calculations. Yeah, so I don't want to go into too much detail, but every valuation method has one box here, one piece of paper. So we try to make it very intuitive. Then multiples, we see one outlier here, Q Tech AG. We probably should have excluded that one. There's some more multiples, EBIT multiples, price earnings, all the different multiples you would expect for the trading comps. Then here the transaction comps. Not too many contributors here for PE, for example. So I could just hide this method. Yeah, if I hide it here, if I also hide this one, what you see at the top is that these methods are now disappearing, right? So we only see 2 multiples left. very useful, right? Because you always have one or two methods that are outliers, and in this way you can, you can hide those outliers. Right, I've already showed how to adjust the parameters. One last thing I want to show you here before we close this demo is the exports, because this is really everybody's favorite feature because it's so quick and it really replaces the most annoying part of the work. So why don't we export into the indicative valuation report in English? I just hit the export button. And what the system does now is, and this might take a few minutes because it's depending on how many people are working on it. This is now generating a full valuation report on the browser. Maybe while we wait for that, let me start another poll. Leonardo, have you built your own reports, or are you using mostly the existing reports we offer?
We have our own report, but we are using some parts of the report that Valutico exports to use in our report. For example, the WACC table, that graph is very elegant and very it's very easy to explain to our clients. So we use that in a full.
Got it. Yeah. What you could explore is also the option to build your own templates. Not many people are using this yet, but it's, well, I see the download has just started. Maybe I'll show you the PowerPoint first. One thing after another. So this, I think I have to share my screen again and share the PowerPoint. So this is what this looks like, yeah, just very quickly. Typical export, everything you saw earlier on the screen. Now in the presentation, you can edit stuff, you can change the descriptions, you can change everything, right? This is just really a PowerPoint presentation, nicely formatted. Best practice, 37 pages in this case, that you can use either in its entirety or individual slides like Leonardo. So this is how this works. Yep, thank you. And then very quickly, I pointed out that there's also an option to design your own template. You can do this by clicking on the plus button and then download our template, edit the template to really make it match your needs, your design. If you have your own company design, re-upload it, and then Valutico will export into this template. Unfortunately, that's only possible in Word, right? In PowerPoint, doesn't work with page break and a few other things. We even had clients who got very creative and used the landscape Word and rebuilt the PowerPoint this way. So it's incredible, what the people come up with. Okay. Now, glad to share the results of the poll. A full 63% think it's very important to improve the valuation processes. And a further 38% think it's important. No one's neutral on the topic, and nobody thinks it's not important at all. So that's very good. So everybody who contribute to that with it either very important or important, please speak to us. We'd like to show you a bit more about Valutico and what it could do for you. Right? Good. That concludes our little presentation of the platform. 45 minutes, just like we promised. Leonardo, do we have anything open? Anything we haven't discussed, or that you would like to add?
Well, I think we covered most part of the important points and relevant features of the system that we use here.
Agree. I saw we have one question from the audience. Eli had a question. You can just put it in the chat or in the Q&A. Or if you want, I think we can also give you speaking rights here, although I haven't tried that yet. Eli, you decide. Let's give him a few seconds. Any other questions? Please let us know. Okay, if you're valuing a not public held company, can you feed the information in the system? Yes, well, it depends on what kind of information you're talking about. But for what you can do, for example, is you can upload your own transaction multiples, right? So if you have everybody has worked on transactions that are not public, but maybe you want to reuse that data, you can of course upload that in Valutico, and you will be able to use that. A beer factory, that's a great example. I hope everybody's following the chat here. Yeah, I mean, look, there are, first of all, for beer factories, beer distributors, there are a large number of public peers and also a large number of transactions. There was a big wave of consolidation in the industry a few years ago. I happened to work on one project there even. And a lot of that is public because these companies, InBev, Heineken, you name it, they're all huge companies. They usually report their transactions. So yeah, you should definitely be able to value a beer factory. Even pubs, by the way. I've done an evaluation for a pub. I thought this is impossible. There is a lot of data out there on pubs, especially in the UK. Thank you, Ellie. Great question. Okay, if there are no further questions.
One thing I remembered here, we were discussing these days our own model, and we were talking about market-based discount rates. So if we had to use US market databases or Brazil's databases or Damodaran and Professor Damodaran databases, so what we're gonna use to input to serve as and inputs for our own model. So we stopped discussing that and we moved to Valutico, and that part you showed from market-based data, and we started from using directly from there and stopped chatting and discussing about what would be the best measure because it's all there. All the good metrics from Capital IQ, which is one of the best databases in the world. So we stopped discussing this kind of things and starting, as I said, analyzing the module.
Great. And I think that's exactly it. And then I think we reached our goal, right? Because we want you to think about, as you said, the strategic things, right? Leave the number crunching to us because you can rely on our numbers and on our models. I think that's great to hear. Excellent. Well, Leonardo, it's been a pleasure. Thank you for joining us today. It's been great having you.
Thank you.
Look forward to working together with you.
All right. Thank you.
To the audience, thank you very much for tuning in today, and please speak to us if you're interested. Thank you very much.